Good morning, video morning brief of the U.S. stock market. I'm Rich Potts for Critical Point, Monday, February 10, 8:01 a.m. Eastern Time. Okay, so we had the Super Bowl and the Eagles won, and in theory that means the stock market goes down. Of course, that doesn't make logic and common sense, but believe it or not, it makes statistical sense. But for the moment, the stock market's up 27, so it doesn't really care, and that's for the S&P 500. We've also had a variety of economic news last week. We saw the PMI services come in and the combined, and there was a big drop from December to January on the service side, while manufacturing actually improved some. But overall, the combination was down. The economy actually slipped some going into January. And I still think that means some concerns here of businesses and consumers of where they're going. McDonald's even reported this morning not so good sales, consumers cutting back here. And again, I think it's just the Maganomics and politics right now and the position of businesses that we had such a good run up in the last 2 years. It's time to at least stall things out for a bit here. But we're going to have to keep an eye on a lot of this macroeconomic stuff here and the behavior of people that can impact the stock market. If you strip that out, we still actually have a very good economy and things are still humming along. It's just there's cracks, there's problems, and you can see these other things can come in to bring us down, and I still want to look for possible recession, secondary recession this year into 27, but it doesn't have to occur. And I'm still suspicious of sideways to down in the stock market to maybe as late as October. But things could bottom out sooner and improve sooner, and we're just going to have to keep an eye on this data and the mood and behavior. All right, on a very short-term basis then, the model shows that Friday the market was supposed to sell off for a level 4 interweek to major intraday swing, and it worked. It worked very, very well. People were a bit panicky ahead of the weekend, and by the way, China has come in with 15% tariffs on a variety of things, and they'd already done some prior tariffs, and they're already doing now increased investigations of U.S. companies. This was in retaliation to Trump, and Trump's now going to retaliate again. As of today, he's supposed to announce 25% tariffs on steel and aluminum, so we'll have to watch out for that. And that was the business mascot who's visiting the office, Lulu. Okay. All right, let's move on here. So the market's showing that it wants to swing higher into level 4 top, and the model's already estimating that once again it's going to use that kind of intraday, intraweek seasonal pattern of about 1 p.m. today, Eastern Time, on into 1 p.m. tomorrow. So it's offering pretty much maximum amount of time for this. So it's unknown how soon it will top. I personally favor earlier rather than later. The model doesn't seem to have an opinion right now. It's just saying, hey, the trend is up, and it's up until it's down, of course. All right, so should see some more upside today, this morning at least, but I think late today into tomorrow should anticipate a downswing. It may wait until tomorrow, but I think it ought to start late today on and tomorrow for a level 4 interweek downswing. Now, as we zoom out for those level 4s, we see the level 3, that's an actual trend in my opinion on daily charts, and whereas weekly it looks like a pop and drop again, but daily it's really the larger, longer up move per month, the most important. It isn't always the longest, but most important, okay? And it is how business is done in the free market system. Well, the level 3 in theory bottomed, okay, on February 2nd, and it topped as of Friday last week. And the trend ought to be down into next week, perhaps even a little into the following week, okay? So to me, that's now setting up more time to go down on what we had up. I think it's a sign of larger trends can be evolving to down as I forecast. I think it's a bearish characteristic. However, if you look at these level 3s since the mid-December, they've been breaking in half. It's like they're more anxious than ever. They're trying to trade it faster. They can't wait to how they would normally do business. And I think the reason is we have level 2, level 1 trend traders. Those are the largest trends in a year. They're trading more short term, and they might not be as experienced about it, creating a little more volatile trade, okay? So these are sloppy level 3s right now because I think we're going through a long-term topping process into a bottom in May, June, July, and maybe not until October. But it may be just stalling. It's not really a top, okay? They just can't make up their mind, and they may not make up their mind till well later this year, okay? So that's working against us, that it may not be a nice, crisp, outright down move into next week. And I've also learned that the model is saying if we pull out of this level 4 top today, tomorrow, and put it back up, it might go higher still, and it would allow 2 more level 4 upswings to take this market higher than Friday's high. And hopefully not to a record high, but it may, and that won't necessarily destroy my outlook months out, but it can cause some worries, concerns. So this market may have more upside yet this week, and I warned you of that last week. But currently it's suggesting it's probably not going to trade above last week's high, Friday's high, and is unlikely to trade on up to 61.50 or higher for futures, okay? So I think this is going to stall out soon, and maybe it's going to be sloppy and difficult for us, but I think the market ought to go lower into a level 3 bottom next week, perhaps even later still. Now, while I'm on this list, I'm going to slip over to the interest rates. And when the interest rate of the 10-year Treasury note traded above this line, that was a signal that we're probably got a level 3 up move. And at the very least, we're seeing some more bullish interest rate level 4s, okay? Now, a level 4 top can occur later today into tomorrow. Well, if that would knock interest rates down quite a bit, that should work against us on our bearish level 4 on the stock market. So do keep that in mind. But for the moment, I don't think interest rates are going down much at all. They may not go up much at all. And I think it's going to coast through this. But ultimately, as I look out to next week, interest rates ought to be higher. And I think they can go higher for most of this week. So to me, that's a negative and can support our idea stock market goes lower into next week. All right. So now, when it goes above this line up here at 4.597%, I think that's a sign of a larger level 2 level and uptrends when interest rates can be higher in March, pull back April, higher May, June, July. Overall, interest rates just go higher into May, June, July. That's the opposite of what we're forecasting in the stock market, and that's how it probably should work. That the stock market ought to be down, okay? So at any rate, I like what I see this morning on the interest rates of developing this, but it's just developing. It's just getting started. I don't know how well it'll work or useful it will be at this time. Let's go to the S&P 500 daily. Big down move yesterday, right at the time we were saying sell. I think that's a level 3. I think it should go lower in the next week or following week. It's dipped below the 5-day average this morning. It's going to open above it. But that may be a gap when they start selling. They just keep on selling. It's not necessarily a bullish gap where they would sell it into the gap and then buy. They may, but they may just also keep on selling. It's just something to watch. We don't know what it really means. I doubt anybody knows for sure, but it is something to watch. But my opinion, the next target is the 40-day moving average, okay, that's coming in at about 59.90. All right, and if it can't hold there, it ought to move on down to the 100-day moving average, currently at 59.06, and then there's also a gap below 5900 that I think should be filled. It should go below that 100-day moving average. Now, if it flips around, goes above Friday's high, okay, which is currently at 6101.28. If it does that this week, that's, in my opinion, still extending the level 3 trend. I'm still going to look for sell. I'm still going to look for a top and throw darts at it. But at the moment, I like what I've seen Friday. I don't like what I see this morning, but I think it's just a blip up in the level 4. As long as it doesn't go above Friday's high, I'm okay with it. The next swing lower, I think they can become a bit more bearish and make this work for us. Let's go to the daily chart of the S&P 500 futures, get the overnight price action in there, a little more information, plus the model analysis. There it is, level 3 bottom, slam it up in the level 3 top, break it up, make it choppy, sloppy into a level 3 bottom, just as they had done back in December. Put it back up, level 3 top, it should go lower into next week. But what they did was they opened it much lower because of the tariff retaliations, China, U.S. primarily, okay? And then they put it back up, and they didn't really see enough information to make them want to sell it. I think by tomorrow, they're going to sell it. Now, I will say, looking at this daily, I would say even though it can top 1 p.m. today, we really ought to consider it's not going to top to tomorrow or maybe overnight market or something like that. So I think it's probably staying up today, maybe up a little more tomorrow, then down tomorrow, okay, and maybe even down into the following day. And if we can just cap this and get it back down, I think ultimately it's just going to work lower into next week. I think that's the best forecast. I think it's working. All right, even though this is supposed to be a very short-term point of view, I'm going to double check on the S&P 500 cash. NASDAQ and Dow Jones are something similar. What I wanted to point out is notice the prior 2 weeks, they put the market up and they couldn't hold it up. They brought it back quite a bit. Even if they were able to keep it above the open or even the prior week's close, there's something wrong with this market. They put it up a little too fast. Somebody's willing to sell it at those higher levels. There's a supply up there, okay? And now we'll just see this week, are they going to poke it back up there? And will that supply come in yet again and put it down? To me, I think this market is just tiring out, and eventually it's going to give in. And this market's going down into March into a level 2 bottom. Then probably up April, down May, June, July, and perhaps even down a larger amount, and we'll discuss that over time. I like the weekly indicator overbought, rolling over as if it's trying to trigger a sell signal, but it hasn't given it yet. I think this is some kind of topping process that might even be long-term, but only minor long-term. At the very least, I think it's a level 1 type top process, and I think Dow Jones, NASDAQ, and the S&P 500 are going lower into March. And if when it trades below last week's low of 5924.14, I think people are going to get more serious that if they had been bullish or not selling that much, they're going to feel behind and they may get a little more scared and aggressive. And as we look out into March to that level 2 bottom, it may be a sign more bad news is coming than good news, but I don't doubt there will be both a mixture. All right, that's all I've got for the moment. The dollar really hasn't done too much. It's acting like it's trying to bottom for a level 3 bottom and can be up into next week. And that may coincide with a bounce in interest rates into next week. And again, those may be drivers to help bring the stock market down in next week. But I think right at the moment, the tariffs are what bother the market. I think some of these earnings on companies really haven't been the greatest season of earnings like we've seen over the last 2 years. I think some of these companies are having a little bit difficult time of moving faster and faster profits and better earnings and all that stuff. Things are slipping, things are cracking here. I think this market has just been slowly waking up to that and going to start to forecast. And like I say, I think this market's going lower into March. I think there's a good chance it's going lower in the next week. I think it probably is going higher into tomorrow than down tomorrow. So there's your level 4, your level 3, and your level 2 trends. Past results are not necessarily indicative of future results. Have a great day. Thank you.